Hello, everyone. I wanted to use the Bitcoin chart as a way to demonstrate some basic charting techniques, some of the things that I think are most important. Let's just make sure that's recording. That looks fine. So this is a chart of the price of Bitcoin in US dollars. It's a 12-hour candlestick chart. So every candle represents 12 hours of trading activity. And my current feeling is that this is an appropriate time frame to analyze the medium-term trend in Bitcoin. So having a look at it here, I think the most important thing for any asset, whether it's this is not a Bitcoin specific video, we're just using it as an example. But if you're looking at gold, if you're looking at a market, a currency, a stock, the most important thing are key previous price levels, or certainly all-time record high price levels, areas where the price has found support or resistance. So support being buying support and resistance or a roof being selling pressure, a price that it struggles to get through. So if we look at the Bitcoin chart, if we go back to mid-November 2024, you can see around this 91,000 level here. You can see that was previously an all-time high. Took quite a few candles to break through, and once it broke through, have a look at that, found support there again. Support there on the candle wick that might be a little bit hard to see on this video. Lots of support there, support again. There's a candle wick there that again might be a little bit hard to see on the video. And if we draw that line across there, you can see that 91,000 level is pretty important. You've got lots of resistance there, so a roof or a ceiling on the price. The price breaks out, it comes back down to test the floor. The price has there is actually a little candlestick spike there. Look at that, lots of support around this level, support. It tried to break through, but the buying support came in again. There's another little candle wick there that you can't quite see on the video, but there is one there. And you can see once it broke down with a vengeance, and it came back to find resistance there. It did briefly get above, but we'll have a look at that level in a sec. But you can see how once it broke down, the 91,000 level, which was previously a buying support level, it became a resistance level, a selling level. Now, something else you'd want to look at is the all-time high. Now, it did briefly touch almost 110,000, depending on which exchange you're looking at, but we'll call it 109,000. And about 107,000 seems to me to be the key level of resistance, the all-time high, or very close to the all-time high. And you can see if we draw the line across there, once again, we've got the top there, and that was in 16th, 17th of December. The top there again, lots of candle wicking and touching there, which again, is probably a little bit hard to see in the video. And then once that level was respected, we saw a bit of a sell-off. Now, in the shorter term, you can see this 95,000 level here. That was a level of support from about the beginning of February, 3rd of February, through to about the 24th of February. So you can see a very tight trading range there. Lots of activity around that $95,000 level. And it was just squeezing in that level. And you can see once it broke down, what did it do on the first recovery? It came back to what was the previous floor, the previous support. It came back to test that level. See that big green candle, and it ran into the $95,000 level. The sell-off then ran into the $91,000 level, which we know is another key level, and then the sell-off. And you can see that around the $80,000 level, there is some buying support. So again, we touch 80,000, little bit of a candle wick there, tries to make a new low, and it does. But you can see now, and we're moving on to a slightly more advanced technique, but these positive divergence signals on the MACD and the RSI. Notice the price making a lower low as the momentum indicators are making a higher low. So that's an indication that this current downtrend is losing momentum, and you can see it's just kind of trading in this tight range sideways. So I still think this is pretty bearish price action, but you can see how important these previous levels are. You know, you could even argue a case that the 95, this level here that is trapped in around 100,000 is obviously a key level, 100,000 being a psychological price barrier. So I'm drawing a line around the $100,000 level. You can see touches there, lots of tight trading activity, touch there, tried to get above, quickly sold off. Once it got above, once it broke 100,000 with the clean break, you can see support, buying support there. Once it breaks below, then it gets trapped in that range. So these it's very important to look at previous price levels. And I'm not talking about angled trend lines, I'm talking about horizontal lines, actual price levels. And you can see how many times these key levels are respected on the chart. So if you were someone, and I'm not giving any advice to buy Bitcoin, in fact, I don't have a positive long-term view of Bitcoin. This is just for educational purposes, but you can see how if you were bullish on Bitcoin, if you wanted to add to your crypto around this $80,000 level, if you're aggressive, if you're looking for an aggressive entry, it's had a nice little 20%, or well, from the high to the low, it was nearly a 30% sell off. But if you took, the key levels on the chart, you could say it was about, oh, wow, actually about a 25% sell off. So around here would be a level where someone who had a very positive view on Bitcoin or crypto in general, where they might want to accumulate. There is some buying support here. Whether it holds or not is another matter. I actually think this is bearish action, and I expect at some point it's going to roll over and we're going to go back to test the longer term level at around the 70K. I'm going back to a 5-year chart. You can see that's so now we've moved from a 12-hour candlestick chart to a weekly candle chart that goes back 5 years. And you can see this level around $65,000. Pretty key on the chart. It was the major top in 21. It was the major top again later in 21, in November 21. And then it broke above, and look at that. It spent quite a bit of time forming, a broadening, falling wedge pattern with the flagpole. That's a very bullish pattern, but you can see that level, that $65,000 level, it spent a lot of time. That is from March 2024 to October 2024. So it spent 6-7 months or so consolidating around that key previous level. So you can see that is another very important level. And you can see from this chart, the double top, the breakdown, you can see why I might suspect we're coming back here to test that level. I'm not saying that will happen. I'm just saying from a charting, a technical perspective, a risk management perspective, it makes sense that it would come back to this level. And let's just have a look at one more quick thing. If we go to a daily chart, so we're looking again at our tops here, and maybe I'll just clear all that because it is a bit messy. Let me just, I didn't want to draw that. Let me just zoom in and we'll delete that. And you can see the topping pattern here a little bit more clearly on the daily candles. Notice all the candle bodies top out around the 106,500 level. So you can see a major top again, lots of respecting of that level. And you can see as the price was hitting highs, even as it moved up here and made a high there, a higher high, and then testing the same high, what do we see on the momentum indicators? Negative divergence as the price making higher highs or finding resistance at the same level. So price trending up, momentum indicators trending down. And I look for those divergence signals in conjunction, or putting them together with key previous price levels on the chart, support and resistance. Other patterns such as you could argue this was a double top pattern with the double top breaking there. You've got the distance there from the top to the bottom of the pattern, and you can see the breakdown around the same distance, which is very common when you get a double topping pattern like that. So it's not a double top until it officially breaks. So when it broke down and traded with an $89,000 handle down here, that was a break, the double top pattern breaking. And you can see if you take the resistance and support of that pattern and you project it down, you can see, look at that, it reached target. So short-term reached targets and buying comes in. Little bit of positive divergence on the daily chart, not so much on the MACD yet, so it probably needs another little spill. But you can see the all-time record high. So if an asset is at an all-time record high, from a risk management perspective, it makes sense to reduce your position, to sell a little bit. And you got a second chance. It reached that level again, and you could have said, "Wow, it's hit the all-time record high again. That's the best price I could ever possibly have sold this asset." Obviously, some of you think it's going to be higher in the future, but we only know what we know now, and we know that at the time that was the highest ever price you could sell. You had hitting resistance, you had negative divergence, you've had this big run up prior to that, from November the 5th to, really 4 or 5 weeks, it went up 57%. Made a lot of sense to sell. And you can see again on the daily chart, that key level. So if it got back to here, that would probably be, if you accumulated some here, you'd probably want to take a little bit off the table if it got back to this level, because we're seeing a little bit of a downtrend starting to form. You can see the price is trending down. So if we draw that line and we go out to the 92 level, you can see if it got back to here, it would be hitting the key level of 92, and it would also be respecting this downtrend that it's forming. That doesn't mean it will hold. It just would be a level that would make sense that if you bought some here, let's say you didn't get the low, you got in at 80,537, you get back to here, you've had a 14% move. Okay, you take a little bit of profit. You don't have to sell everything. You could buy and sell in 20, 30, 40 parcels if you like, depending on how much money you have allocated to this particular asset class. So some interesting charting principles there. I hope that even whether you learned something or you just reinforced some things you already knew, but the Bitcoin chart certainly very interesting on the daily, on the 12-hour candlesticks. Um, and thank you very much for listening, and more charts to come soon. Cheers.